In this video, I'm going to show you how you have to operate to calculate interest along the loan life and how you have to reimburse the loan whenever you get one in the case of a company. So the first thing are the key concepts you need to know in order to understand what are we going to talk about, okay? You will see these concepts in a deeper way in another courses around your studies, but today we're going to focus in the basic vocabulary and the basic things you need to know. So the first thing is what we call the outstanding loan, and that's the part of the loan that you have to return yet. Then you have the reimbursed loan, and that's the part of the loan you have already returned to the bank. You have the liability cost, and that's what we're going to call financial interest. And you need to remember that we always calculate interest over outstanding loan. So we're going to see this with an example because it's the easiest way to do it. Let's imagine a company that gets a loan of 80,000 euros at a 5% interest rate. They return 60% during the first year and the rest, same amount each year. So here we have a little chart. We have the number of years, it's going to be 3 years in total. Then you have the outstanding loan, and remember this is the loan you still have to reimburse. We have the financial interest. We have the reimbursement, the part we're going to return this year, and we have the pending loan, the part that we still have to reimburse in future years. So we calculate outstanding loan as total loan minus loan reimbursed. And we calculate the financial interest, as I told you before, with the outstanding loan multiplied by the percentage. And this percentage, in this case, is the 5%, the interest rate, okay? So there we go. First thing is calculating the interest. So we do the 5% of 80,000 and we get the financial interest for year number 1. And now we calculate the reimbursement. It's a 60% for the first year, so 60% of 80,000. How much is spending? How much do we still have to return in future years? Total loan minus loan reimbursed. So 80,000 minus 48,000, sorry. Let's start with year number 2. What's the outstanding loan? Whatever was left in the previous year. So outstanding loan in year number 2 is what we left pending on year number 1, 32,000. Now we're going to calculate the interest. We're going to do 5% of this 32,000. Now it's time for the reimbursement. And we said the rest amount, so we reimburse already 60%, which means we have 40% pending, same amount each year. So if we have 40% and we are going to do it in 2 years, it means 20 and 20. So 20% of 8,000, it's 16,000. And how much is pending loan? Well, whatever was pending last year, 32,000, minus what we reimburse this year, minus 16,000. And that gives us 16,000. So outstanding loan for year number 3, it's going to be 16,000. The financial interest is going to be 5% of 16,000. And the reimbursement is going to be that 16,000, again at 20% of the 80,000. Same amount each year. You see, the last 2 years, same amount each, 20 and 20. How much is pending loan after this? It should be 0. We finish reimbursing the loan during year number 3. And this is what you have to do to calculate the financial interest and the reimbursement in order to put it in your chart. How or where you have to locate this amount? Look, whenever you get the loan, you have a collection. So there's money coming into the company when you get the loan, so you have a collection. And every year you have a payment. The reimbursement, it's the payment of the loan. What happens with financial interest? Remember, we're going to consider that any loan the company is getting, it's going to be used to produce. So, are these financial interests necessary for production? Yes, they are a cost. Do they belong to any departments of the company? Yes, to the production department, so it's an expense. Is it paid? Yes, you always have to pay your interest, so it's a payment. So check the difference. Whenever you have the loan, it's just a collection or a payment, so it's just money coming or going out of the company. But the financial interest is part of the production and is part of the usual work of the company, okay, usual activity of the company. So it's also an expense. I hope this helps and see you in the next video.